So with the stock market having a bit of a pullback last week and looking at Monday's pre-market, it's looking quite awful as well. So it looks like we're going to have another big red day coming up. A few people are starting to whisper in the background, are we heading for another stock market crash and what's going to happen to the stock market? So today, what I thought I'd do is I'll go through what could potentially happen going forward. So I hope the video is useful. If it is, make sure you smash that like button. Now I am going to start off with this point, which is quite funny to start with, but no one knows what's going to happen in the stock market. So bear that in mind when I'm talking about this in today's video. No one knows if the stock market in the next few days, weeks, months is going to go up, down or sideways. But what I'm going to try to do in this video is trying to give you the constructive information about what to do in different situations depending on where we go. So I think that's really key. And something about what I mean about that is that no one knows where the stock market is going to go in the short term. Some key examples are, if we just go back to June, when we were in June, the stock market was, going lower and lower. Stocks were selling off massively. If you look at the sentiment out there, everyone was, very fearful on the market. Everyone was going, oh, it's just going to get worse. We're heading into the biggest crash that we've ever had before. And what did we have? We had, a massive bounce, stocks up over 100%. And we had one of the best few weeks really since, March 2020 or November 2020 when we got the vaccine news. So that's just a prime example of, all that negativity out there, and then very quickly moved to a very positive direction. And if you look at, March 2020, everyone was like, oh, it's a pandemic, this is going to be really bad. The stocks went on one of the best bull runs they've ever been on. Another way is looking at this is a negative light is if you go back to February 2021, everyone was looking at this going, oh, stocks only go up, they're only going to continue to go up, we're never going to have a dip again. And then look at that, we had a massive downtrend from there. So it's very important to remember that stocks could go in any direction, even when the investor sentiment is so focused on one direction, that's where it's going to go. Quite often it can go in the opposite direction. That's a prime example of no one knows where stocks are going to go in the short term. First of all, one key thing that I'm going to say is that the market is moving a lot. This market is very volatile, and normally what we have is a market that, obviously what you're going to have is a market that moves up and down, but normally over history you'll have a market that slowly has that upward trend. What we have at the moment is we have a market that is making very aggressive moves at the moment, which is interesting to see that we are seeing these moves, and it is very important that when these moves are happening you do capitalize on these aggressive moves. So for example, a few weeks ago we had stocks shoot up 100%. That's very rare to see stocks shoot up so much, and when you have them opportunities to maybe trim positions, it's always very key to go, okay, realistically, even if I'm in this for the long term, for me personally, I invest into stocks for 5 years. If I have a stock move up 100% in 3 weeks, it's always worth considering, is that a natural move? And also the great thing as well is that we're having extraordinary buying opportunities. So for example, we've had, stocks go from, $200 down to $60. And that's also presented really good valuations. There's sometimes, especially when it comes to the sell-offs are normally aggressive, but in this market they're being really, really aggressive. You're getting really, really cheap valuations, and it's also important to capitalize on them opportunities when the market is being very volatile and moving in the down direction. And I think that's something really key to look on, is even as a long-term investor, there's some short-term opportunities to be looking at right now. Now, in my opinion, we are at fair value in the stock market. I would especially say on the big tech. I think the big tech is very fairly valued, especially, them likes of, Amazon, Apple, Microsoft. I think they're very fairly valued. I would even argue that some are potentially overvalued. I would say that when you look at the small caps and mid caps, a lot of them stocks are still massively sold off. And I'd actually say that some of them are still a little bit undervalued at the moment. So give or take, I would say that we're about fair value. I'd argue that some stocks are a little bit higher than where they should be. I think some stocks are a little bit lower than where they should be. But you've got to remember, we're still in an environment now where we have, the indexes down in bear market territory. They were down 30%, and now, if you look at the Nasdaq, and now it's something like 20% down. When you look at the indexes at the moment, we're about fairly valued when you look at the situation. So for me, really, I don't really have a feeling where this market's going to go, because I look at the market and I go, right now, you look at where stocks are valued at, I think it's pretty fair. Like, we know we're in a situation where we've got inflation quite high. We know that some businesses' earnings have been hit, and you look at the impact that that's had on the share price, and you're like, fair enough, it's had the impact. I don't think it's had the impact at the moment, but it could get worse. This is the key thing. The situation could get worse. If it gets worse, then obviously stocks will go down. But when I look at the market right now, I think this is a fair reflection on where we're at. At the same time, I can't see, in my opinion right now, personally, stocks going back to 52 highs, indexes at 52 highs. Because when I look at the situation, I look at the economy right now, and obviously the stock market is future thinking, so the stock market will get back to 52 highs before you see the recovery in the economy get back to, doing amazing numbers again. But at the same time, I look at that and I think there's still a few issues at the moment. Like, we've only had 1 month of good inflation data at the moment, and that's the key thing, is that I don't think we're at that situation either. So for me, we're in no man's land, and that's what's key at the moment. I think at the moment we're actually pretty fairly valued. Where the stock market will go from here, I don't know. It could go low, it could go high. Either way, I think that's where the situation is at the moment. Now, for the stock market to start moving in a more positive direction, there's a few key things here. First of all, earnings. So when you look at earnings, like I just said a minute ago, earnings pretty much suggested that we were in the right situation. You had a few businesses coming out saying, we're actually okay, we're not having much impact. You had a few coming out saying, oh, we are getting impacted quite hard at the moment. It was a bit of a mixed bag, so there wasn't really concrete numbers where to go off in earnings. Obviously, there's a few more earnings this week as well, so it'd be key to hear from them companies that report earnings, but it's a bit of a mixed bag at the moment. So I would say earnings were okay. It's not enough to kind of send us back to 52 highs, but I don't think it's enough to worry us in the current situation. And unfortunately, we don't really get any more companies' earnings until Q3, which is actually the back end of October. So at the moment, we're in a bit of a stalemate until October, until we see in a few months' time what a lot of those businesses are going to say, because a lot of businesses have been suggesting towards that back end of the year, we actually start moving into a positive direction as, say, oil prices come down, as you say, logistic issues start resolving themselves, and that's and inflation starts sorting itself out. That's the key thing. So really, we don't have much data really to go on now from these businesses until October. So this is why I think we're in a bit of a stalemate right now, because we got in earning. I think we've got the numbers from earnings which were okay, and them numbers from earnings that were okay basically give us that lift in the stock market, because everyone kind of looked at a lot of these stocks and went, you look at the share price, that's actually the business, it's doing all right, that business, and I think we were okay from that situation. But like I said, we don't really get the fresh batch of data now to Q3, which is October time. Inflation. The new data from inflation through August, and see how that is going. The key thing is that's still weeks away. We've still got quite a few weeks left in August, or a few days left in August. We've got half the month in October to go through until we get or September, should I say, until we get August's inflation data. And that's another key landmark. So we're still stuck on a few weeks really until we get the next set of inflation data out. Because the next set of inflation data out will be really key, because we're looking and thinking, has inflation peaked? Can we get another month where we start downtrending? That's really positive. If that's downtrending, obviously you start looking at the Fed and you go, okay, we've had 2 months of decrease in inflation now. How much is that decreasing at a quicker rate than what we thought? Is it doing a slow downtrend? Is it going to level out? That's another key indication. And same again, we're still very much weeks away from that sort of data at the moment as well. And the next thing as well is, like, when we look at the sell-off right now, you've got to remember there's probably going to be a bit of profit taking going on. And when you look at a lot of the stocks at the moment, a lot of these stocks, like I said earlier, are up over 100% within a few weeks' time. Major moves. When you think about, say, the S&P 500's average return is 8-9%, and you've got some stocks up over 100% in a few weeks' time, there's going to be some profit taking. There's a few people that bought in that kind of June period, or been averaging down through the drop that we've had over the last few months, and they're probably sitting on nice averages. I'm sure a few of you guys are doing it as well, and you're going to be up on some positions, and there's going to be a few people actually look at this point of time frame right now and go, you know what, I'm going to take a little bit of profit off the table. And if a few people are doing that, it makes sense. If you look, I just dropped my lid. If you look at me personally, I sold some profit off the table as well recently. I took Mercado Libre, Celsius, InMode, I mean, you can kind of class AA at 8. You know, I've been taking some profit off the table, so it makes sense for other people to be taking some profit off the table as well. Because, like me personally, I was looking at a few of my positions and looking and going, I'm up over 100% within a few weeks' time. I'm crazy not to just trim a couple of positions now. So there's going to be some profit taking when you've had extreme jumps up like this. That's what's going to happen. So overall, where are we at right now? I think, like I said, what I was summing up a few minutes ago, is I think we're a bit stuck in no man's land. I think that when you look at the situation right now, I think stocks don't deserve to be, 52-week highs, because you look at the businesses, the economy, it's not fully kind of moving in a positive direction yet. We've not got the data to support that. I look at, can we move downwards? I don't think we deserve to move downwards. You look at a lot of the businesses, they came out in earnings. They said that, you look at the situation here, we're actually okay. Some said they're okay, some said they're doing well. Some of the businesses came out still with decent earnings, better than what was expected. Inflation, you look at inflation's finally peaked and starting to move in the right direction at the moment from what we can tell until we get the new set of data. So for me personally, I'm looking at what's out there and I can't see anything to suggest that we should be moving down either right now, because there's a few things still in the positive direction. Things are not where people were expecting. A lot of people were expecting this situation to be a recession. We were starting to see stock prices priced at levels that they were at in like 2008, which is just insane. If you look at S&P small caps and mid caps, they were the same valuation as 2008, the big recession, the Great Recession, and that was what we were getting valued at, and that was what was insane. And that's why we've seen such a quick rebound off them lows, because when we do have that rebound eventually, that was what's always going to happen. We talked about that many times on the channel. So for me personally, I think we should be fair valued. I think that where we're at right now is pretty fair. And for me, I would not be surprised to see a couple of weeks of just this. Up and down, 1 week giving it, 1 week taking it back. This what personally I would expect. Now, I don't know what's going to happen. Like I said, it could go up, it could go down. If this situation happens, for me personally, I'm just going to hold. I'm probably going to build a cash pile up. I'll probably maybe buy a couple of stocks now and then, but I'd be a bit slow buying or selling. That's what I'd be doing. If the stock market in the next few weeks does go on an uptrend, for me personally, I don't know if we would justify going up much more than what we have done. If we did continue to go up, I'd probably not buy. I'd probably just trim a few positions. And if we did hit a market that trended downwards, obviously I think that's unjustified. I think that valuations were just insane a few months ago. I think a lot of the businesses at the moment, what you can see here, justify that we don't deserve to be going on a massive downtrend. And if we do go on that, then I'm going to capitalize on that, and I will buy stocks that I thought I'd lost the opportunity to buy anymore because we had the big massive rally. I'll try to take them opportunities to carry on buying them stocks. However, what I'm going to say just to finish off with is that for me personally, all of the short term does not affect me as a long-term investor. It doesn't affect my decisions on holding businesses. Obviously, I invest in all these businesses for the long term, 5 years. But in the short term, what I'm going to try to do is I will try and just capitalize on maybe opportunities where stocks get a bit way too sold off, and I'll be buying them. If I see stocks making a few unnatural jumps, I will just take a little bit of profit off the table, which is obviously a good thing to be doing because we're all here to make money. However, for the majority of the stocks, I would still, for example, if we take HIMS, DraftKings, I would obviously still hold them. For the longer term, with the aim of holding them in the next kind of 5 years, that's where I would want to see where those businesses do end up. So that's my thoughts on the current situation. And yeah, overall, I don't think stocks deserve to crash again. I think we're pretty fairly valued, but whatever happens, that'd be my game plan on all three of those situations anyway. So I hope you enjoyed the video anyway, guys, and I'll catch you in a bit.